Hello, this is Nate Paulson from Paulson Wealth Management with a June 2016 Educational Economic Update. In this month's video, we'll talk about some of the economic events of the month of May and give you some insights into how they might affect you as an investor. Please stay tuned at the end for a required disclosure statement. The Federal Reserve was at the top of Wall Street's mind again in May, though the central bank voted to hold rates steady in April. The official minutes from the meeting showed that the Fed is much closer to raising rates than most experts had predicted. The report showed that the Fed is moving away from its cautious stance and is open to raising rates as soon as June or July, if the economic data shows that there's healthy growth in our economy. The change in the Fed's official stance surprised many experts who weren't expecting an interest rate hike until the fall or winter of 2016. Remarks by Fed Chair Janet Yellen endorsed the same views expressed in the official minutes. Yellen supports a rate hike within the next few months as long as economic growth picks up and the economy continues to produce jobs. Though Yellen thinks the labor market has come a long way, her concern over sagging wage growth and low productivity growth indicate that the Fed economists are watching more than just the headline unemployment rate. A revised estimate of first quarter economic growth might give the Fed ammunition it needs to raise rates this summer. The May estimate of GDP growth shows that the economy grew just 0.8% last quarter, which was up from 0.5% at the first estimate. Though the pace of growth was significantly slower than at the end of 2015, the new data shows that spending on business inventories and surging home building has boosted growth. The current unofficial estimate of second quarter GDP stands at 2.9%, indicating that the economy picked up speed in the spring. Will the uptick in economic growth guarantee a rate hike this summer? Opinions are mixed. Some experts think the economy looks healthy enough for a rate increase. Others think that global headwinds like the strong dollar, Britain's vote to exit the EU, and China will be enough to keep the Fed at their pause level. We'll know more after the mid-June Federal Open Market Committee meeting. As always, we'll keep you informed as soon as the news hits. That's it for the June Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give us a call. Once again, this is Nate Paulson from Paulson Wealth with the June Economic Update. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give our office a call at 630-517-2950.